Hey, what's up guys, John here. Airbnb insiders have been unloading billions and billions of stock in 2023 and in 2022. Why are they doing this? Well, because they know a very big problem is coming to tourism, it's coming to short-term rentals, and it's coming to America.
Analysts expect to see an Airbnb crash. Revenue for those rental units is down due to a big drop in demand.
And investors are not yet pricing this in as to just how severe this problem is going to be in Q1 and Q2 of 2024. I believe we're going to see this stock fall in a very, very big way. And I believe we're going to see a lot more inventory hit the market in Airbnb, but not because they want to. It's because they're going to be forced to try to hold on to these properties because they're not going to have an option. A lot of people losing their jobs, a lot of people forced into it because of inflation, rising insurance and taxes. People are going to be forced to increase inventory. And as that happens, supply and demand are going to have a big impact on pricing. We're going to start seeing these revenues continue to fall for Airbnb investors that are extremely leveraged because they overspent in 2021 when everyone wanted to own Airbnbs. Everyone was making a killing. Well, look at what's going on here. This is going to rewrite real estate history in America. Please hit the like button, YouTube will share this content to educate other people about what's really happening. And if you'd like to fix your credit to position yourself for the greatest real estate wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Take a look at this. So, according to Bar Chart, insiders have sold over 1 million shares in the past 3 months. In the past 12 months, they have sold over 10 million shares worth over $1 billion. These insiders, Brian Chesky, Dave Stevenson, Aristotle Below, right? When did this come out? November 13th, 5 days ago. Well, Forbes, they did an article. This is June of 2022. These Airbnb founders have sold more than $1 billion worth of stock combined the past year. So why are they unloading this stock? Right? Why are they unloading this stock? I mean, it hasn't been performing horribly in relation to a lot of other stocks. I mean, it looks really pretty stable. But if you look at this, you have to ask yourself, is that going to maintain? Is the party over? New data suggests revenge travel may be ending soon. This came out about a month and a half ago, right? It is ending soon. Student loans became due that same exact day, October 1st, right? 43.5 million borrowers start making that payment. A lot of people aren't going to be traveling like they used to, especially for the holidays. And let's look at what's happening to Airbnb market share, because Airbnb's market share is changing, and the media is not really talking about it. Third quarter earnings were a classic example of why people are bearish on Airbnb. The company grew revenue 40% year over year in constant currency to $3.4 billion, which seems strong. However, if you look at its largest competitor, Booking Holdings, Airbnb is falling behind. Booking Holdings grew its revenue 18% over year, right? Year over year, $7.3 billion during the same period. Faster revenue growth at double the size. It looks like Booking Holdings is gaining significant market share on Airbnb, at least recently. Bears also urge Airbnb is oversupplied with hosts and has ruined its brand with high add-on costs such as cleaning fees and inconsistent guest experience that is customers going back to hotels and vacation stays. I've stayed at Airbnbs, and most of the time it's not this beautiful experience. Most of the time it's kind of a hassle, and staying at a hotel has always been relatively seamless. You book on an app, you're in that day, everything's taken care of, no hidden fees, no hidden surprises, in and out, concierge like experience. I mean, it's by far a better experience for me going to a hotel than going to an Airbnb. And when you look at what pricing is for many hotels, especially on like Hotels Tonight or any of these apps, you can get a nice hotel for $150, $200, $300. If you go to an Airbnb, after they add in all the fees, you're going to spend more than that, and the experience is probably going to be worse. Look at Booking Holdings. So look at the companies in which they control. Booking.com, Priceline, Agoba, RentalCars.com, Kayak, OpenTable. Like, you have all these big brands, Cheap Flights, all these big brands that are continuing to gobble up market share. When you look at what's going on with regulations and restrictions coming to Airbnb, it's a big issue for a lot of these investors. New York City, for example. First, you should know that property owners are barred from renting out a whole apartment to short-term guests staying for fewer than 30 days. They are supposed to rent only to people sharing their space while the owner is there. And rentals can only house 1 or 2 guests, no more than that. Entire apartments are illegal unless it says the host lives here and you have access to your sharing, right? And are sharing. So you're starting to see a lot of problems come for Airbnb hosts, including Airbnb as a company. They're getting hit with a near $840 million fine for tax evasion in Italy. And Airbnb, Americans are still worried about affording holiday airfares, right? Despite slowing inflation. So you're seeing Airbnb get hit by all these directions. They're getting hit by regulations, they're getting hit with fines, they're getting hit with increased competition, and they're getting hit with the struggling consumer that doesn't have the money to spend that they had 2 years ago. All these are very, very problematic situations that are unfolding for Airbnb as a company. But when you look at what's going on with Airbnb hosts, there's presently 4 million Airbnb hosts worldwide, and in America there's about 660,000. You have to ask yourself, what is this going to mean when you look at where interest rates are right now, 7.5%, 8%, 8.5%, and you have a lot of property owners that are highly leveraged. They can't get access to capital, they don't have equity in their properties to sell, and they're walking into an uncertain world. They're probably going to look to, bring in a tenant in one of those bedrooms. They're going to look to, rent out their homes short term, because if they rent out the entire home, they'd have to relocate somewhere else. A lot of people are going to start listing their bedrooms on Airbnb. And Brian Chesky is even saying that. Airbnb CEO sees a recession opportunity, renting out a single room in your house, right? They were preparing for this November 16, 2022. Now, they were preparing for this the same exact time that they started the unloading of all their shares, or a lot of their shares. So you have to ask yourself what's going to happen. They're likely going to continue to reduce their fees. They're going to have to try to stay competitive because consumers are going to have less money to spend, and they're going to have a lot more competition from a lot of other companies like VRBO and Booking Holdings and all these other companies. So what's going to happen here? It's going to be a bad news type of situation for a lot of Airbnb investors, and we're going to witness the entire industry change. Like, look at this, for example. This came out January about 2023, so almost a year ago, right? And back then, these are some of the cities that were cracking down on Airbnb, and many have been added to this list. I mean, New York City wasn't even, New York City here is on this list, but look at Montreal, but this was, when they were cracking down, this was before the ban took place. So you have, Colorado, Georgia, Vermont, Tennessee, Idaho, Texas, Alabama, Colorado, Kentucky, Florida. You start to look at this, and this list is growing, and these are a lot of hot areas that people go to travel, and they want to have a really, really nice experience. So what I think is going to happen? I think we're going to start seeing a big change in the mania of Airbnb. I think this huge bubble that was formed is going to pop. And it's going to do so in a very, very big way. I think 2024, 2025 is going to be a really challenging year to be a leveraged Airbnb host that does not have the flexibility to have 10 or 12 nights a month booked. They need to get every night they possibly can to offset these newfound costs. It's going to be interesting. It's going to be a big opportunity, I believe, for investors to scoop in, run out there and pick up deals in a lot of these hot markets. You have to ask yourself why. Why would that be? Well, it's because you're going to see a lot more distress. You're going to see a lot of these hosts that are forced to sell. A lot of these hosts can't hold on. And so when you start to look at this situation, you might be able to go out there and buy a deal, and it's repriced at today's economy, today's real estate value. Now, many markets are still very high. You're going to see a lot of markets where you're going to go online and you're going to look and say, hey, these prices don't make any sense. Give it a little bit of time here. Give it a little bit of time. We're already starting to see less and less and less buyers out there ready to buy. And you're seeing a lot of sellers, you're seeing a lot of property owners and a lot of Americans struggling day to day. We haven't seen this type of struggle in this economy nearly ever, right? We haven't seen consumers pushed to the brink like we've seen yet. And it's looking like interest rates are going to stay a lot higher for longer. And as this job market, labor market changes, more and more people are going to be forced to sell, chasing smaller pool of buyers. Now's the time to be positioned with cash. Now's the time to be positioned with great credit. Now's the time to be positioned with a really strong source of income. You're going to want to put yourself in a position where you can get funding and financing to pick up deals. The way that I look at this real estate market is there's great deals you can find in all markets, both good and bad. But in the hot markets like we're in right now, it's just a little bit harder to find the deals. compared to in a distressed market, in a market where there's more sellers that are needing to sell. Those markets, it's easier to find deals. And if you don't have the experience, the track record, or the team, it's going to become much more challenging to stay competitive and buy deals today than it would be in a market where people are forced to sell. So now is a great time to learn, so later you can earn. What do you think about this situation? What do you think is going to happen with Airbnb and a lot of these tourist cities? What do you think is happening with this massive sell-off happening in Airbnb with Airbnb insiders? Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself what I think is going to be one of the greatest real estate investing opportunities in American history, we'd love to help fix your credit at GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Catch you in the next video.